Okay, right. So today we want to look on IS 16, IS 40, as well as IS 36. So IS 16 is actually the investment pro because on the previous class that we had, we discussed about the conceptual framework. So on the conceptual framework that we discussed, I'm sure that we discussed the conceptual framework. When we discussed the conceptual framework, I told you that in accounting we have got um, identification, classification, recognition, measurement, presentation, and disclosure. So when we're doing the conceptual framework, we're doing the identification. We wanted to identify what element of financial statement is this item. So we saw that we have assets, liabilities, equity, um, income, as well as expenses. Those are the elements of the financial statements that we have. So when we have identified, like for example, we have identified that this is an asset. Now, if it's an asset, what do we have? Now we've identified that it's an asset. It's like you can see that, okay, this is a human being. Now we have identified that this is a human being. You want to move to the classification. So when you are classifying that it's a human being, now you want to differentiate, is it a male or is it a female? And then you say, oh, she's a female. Then that's the identification. And then you know the recognition. Now you are now capturing here. So you are recording that we have another human being. You record here. And then about the measurement, you are telling us about the age of the human being. Same applies with the asset. You identify, is this it an asset? Yes, it's an asset. And then what type of asset is it? Because we have different types of assets. We have got the intangible asset. Let me start with IS2 inventories. It's a current asset. You know, when you are preparing the financial statement, that your inventory it falls under current assets. So inventory is also your asset, which is IS32, IS2. And then we go to IS16, which is PPE, is also an asset. And then we go to IS 38, which is the intangible asset, is also an asset. And then we go to IS 40, which is investment property, is also an asset. So that's when you want to classify. It's an asset, but where does it fall? Does it fall? Is it an inventory? Is it PPE? Is it investment property? And then you classify. So now we are classifying the assets. What differentiates the different assets? What usually differentiates a pool of assets into different categories? That's what we want to discuss about today. So, um, if you see with this one, I just left out the other two assets that are really relevant and also common for your level. And then we have got inventory. What is inventory? That's why you see ICRM. The I is representing the identification, and then the C is representing the classification, and then R recognition and measurement. So we see with the inventory, you will see when we discuss the yeah the C will discuss the inventory yourself much because inventory is actually the assets that we are holding in our business to dispose in the ordinary course of the business. So if our business is buying and selling the assets, inventory is actually an asset because we've got control over it. Our main agenda in this model is to buy of a car dealership. You buy cars, like we buy cars. If you go to we buy cars, the cars are actually inventory on them. They own those cars and also them. So which means it's part of their inventory. And then we go to the PPE. PPE is actually property that we are holding for administrative purposes. Yes, it's mainly for administrative purposes. Let's say that you have a building that you're actually using as your office space. Okay, let me give you an example of KPMG. Why do I love KPMG? Because I'm actually working at KPMG. So that's why I love KPMG. It's actually a really, really brilliant firm. I would recommend you to come to work at KPMG. So with KPMG, if you look at KPMG, they have a building along Empire Road. It's 85 Empire Road. They have a building, and also if you look at also at Deloitte, it's near to Waterfalls, Mall of Africa, as well as PwC. They have buildings there, so you can see that those buildings are mainly used for their administrative purposes because they have different divisions. Those people that are doing auditing, they are also in those buildings. So those buildings they are actually used for administrative purposes. So for that reason, they are actually PPE in the books of those entities and investment. So when you're talking about you are holding to earn rental, if we are talking about the capital appreciation, like there is a new development area, you go and acquire a piece of land, and then you say that okay, I'm going to sell at an abandoned place whereby no one really cares about it. Area, and then they actually increase it. So you just left that piece of land books. You don't classify it as PPE. And then also, if you've got a building that you are using actually to earn rental incomes, is actually asset. As the name suggests, intangible. Intangible is something that does not have a physical form, things that you cannot feel. For example, a trademark. You cannot touch a trademark. You can say that, yeah, I am holding a trademark. So that's the difference between different forms of assets. So we discussed about the inventory, investment property, intangible assets, and PPE. So now let's go into detail. Before we go into detail, do we have any questions? Let me just quickly check if we've got someone who has raised their hand so that we can see that you have a question. And also, may you please assist me by admitting your colleagues. If your colleague is actually waiting in the lobby, can you just admit them into the class? Do we have any question before we proceed? I'm actually here on the main screen to see if someone is raising their hand to see if you have a question. Okay, it's wonderful. It means that we're on the same page, and I really like it. Let's proceed. Right. So, with proper plant and equipment, we don't have much about proper plant and equipment. So, when you're talking about proper plant and equipment, these are tangible asset items. So when you're talking about tangible items, we are talking about things that you can touch. They are tangible in nature. You can see them with your own eyes, and then you can touch them with your own hands. And they are actually mainly used for the production of goods or services by the entity. For example, the example that I gave you about KPMG, Deloitte as well as PwC, they are actually producing services, auditing services from those buildings. So for that reason, they are um, they are PPE. And also you can think of a production company. I'm just trying to think of a production company that is familiar with everyone. Let's say, okay, let's talk about Urban Bread. So Urban Bread is a company that is in the production of bread. So the assets that they use when they are producing bread. So they're using it in the production of asset is tangible because you can go and touch it and you can go and feel it. Also, the building that if they have a building that they are using for administrative purposes, if you are talking about administrative purposes, we are activities. We are talking about the HR department. We are talking about the finance department. We are talking about the different departments that are not directly involved in the production of goods or services. So those guys, they are actually part of the administrative. So if we are housing those people in our building, then that building is actually an PPA. And also it is expected to be used for more than 1 year. So when you are expecting to use the building for more than 1 year, um, in PPA, I hope you are fine. So when do we recognize PPE? Because we do not need the definition. We only recognize PPE when it is probable able to identify the cause of the economic, and also there are costs that you need to capitalize, because when you are, yes, I need this, yes, there are costs that you also calculating the cost of your PPE. So let's discuss about the following costs that we have. The cost that we had. So a mine acquired in Africa. The following details of the cost include as to deliver the assets to the harbor for of destination. So this cost is a direct cost to bring the asset into its desirable use, which means it's capitalized to the cost. And then import tax left on import of the machinery, it's a direct cost to it. Also, the transport to a direct cost. And then 20 of mine current employee were used for 2 months to build the foundation and install the machine. The annual cost of one employee is that the employee to tell you, but maybe things that you have never heard. You acquire an asset, right? You acquired an asset, and then it needs to be installed. And then the employees that you are having, they are already normal employees, and also they are earning, which means they are supposed to be treated in terms of IS 21. Yeah, IS 19, sorry, employee benefits. We are supposed to expense the cost to employee benefit, but because they were engaged in the um, installation of the machine, it means that the cost that they incurred in the installation of the machine is actually capitalized. And also on another note, you are actually, and then you use the machines, and then the machines, they are actually depreciation on the machines that you are using on the construction of a building. So the depreciation of this machine for the period when the machine was in use should be capitalized. It's something that I'm sure that the majority of you have never yet. So the depreciation, let's say that you are constructing a factory and you are using those things for only depreciation for the full year. Let's say that you calculated in, and then which means every month you're charging a depreciation of 10,000 rand. So it means that it was 2 months in the construction of the building. And then at the time it was just used in the business for some other things in the business. The 10 times 2, which is the 20,000, are the- but you are supposed to capitalize. Are we all together, guys? All together. Yes, I can see that you've raised your hand. Please unmute yourself and ask a question. Please unmute yourself. Unmute yourself and say something. I saw your hand was up. If you have got something to say, you can also try to. So we can't hear you properly. Okay. What about now? Am I now audible? Please just type in the chat box so that we can see. Can you hear me now? Please try to type so that. Okay, the network seems to. Okay, so what about now? Any changes or still struggling? Any changes, guys, or is still struggling? Hello, guys, I'm still waiting for your. Um, okay, we can hear now. Okay, so let me just repeat what I was saying. So I was saying, um, when you are using a truck, let's say that you are constructing, you're in the construction of a factory, and then you use a truck. The truck that you are using is um, you use it in the normal operations. So let's say that the total depreciation for the truck is 120,000 rand, and then you only use the truck for 2 months in the construction of a building. So the depreciation for those 2 months, you should not account it as depreciation, but you should capitalize it to the cost of the truck. That's what I was saying. Uh, so I'm sure that it might be the first time of you hearing it, right? And then we have also the general operating cost of the mine for the 2 months. This one can be expensive because um it's not a direct cost incurred to prepare the asset. And then the technical support, the technician supported the employees during the installation of the machine. So which means it's actually a direct cost. And the cost of the consultations is not a direct cost. Then after the completion of the installation, the mine invited the most important customers to a function to commission the asset. So the cost of the function. So the cost of the function, it does not bring the cost, the asset. It will not prepare the asset for its intended use. And also you can see, yeah, so I'm just giving you a write down of the cost that can sometimes be incurred. So you can see here that the cost that we included, you see the cost paid to the supplier, the import taxes, the cost paid to transport, and then the cost of employees. You see the cost per employee for 2 months, and then the cost incurred included in the cost of the machine. And then general operating costs, we discussed about that, it is excluded. And then the professional fee of technician is included, and then the cost of commissioning is not included, as we said. Then the initial operating loss is not also included, and then we get the cost. And also, right. So let's go back. Let's go back to our slide. Yes. So we have what we call the safety and environmental costs. For example, for something like a mine, they usually say that there is what we call the dismantling cost. So the dismantling cost is the cost that they are going to dismantle or to restore the environment after mining operations. So if they say that they're going to be mining for 30 years and then after 30 years, at the end of 30 years, they have to restore uh, the environment. So there is what we call the safety and environment cost. So it needs to be capitalized to the cost of the machine. But for it to be capitalized, it needs to be capitalized at the present value because the amount that you are given, that okay, for example, they are going to incur the dismantling cost, because the dismantling is going to happen after a period of time. So it means that it's a future value. We need a present value on the date that we recognize the asset. So to calculate the present value, that's where we apply the principles of time value of money. I'm sure that you're aware of it, whereby we have to discount the present value. I'm just checking the chat box to see if there's a message. Okay, but no message now. So you have to calculate the present value. So you know how to calculate the present value by using a financial calculator, whereby you're given the future value, the interest rate, the pre-tax. You always use the pre-tax um, interest rate, the number of years, and then you calculate your present value. I hope it's simple and straightforward. So you have also to check. Okay, I will discuss about it later. And then the subsequent cost. So when you are doing the subsequent cost, we need also the subsequent measurement. So when we are doing the subsequent measurement of PPE, it depends that on the model that we're actually using to recognize our asset. We might recognize our asset using the cost model or the revaluation model. Like the cost model, what does it say? It says that it's depreciation less accumulated, sorry, cost less accumulated depreciation. That's the cost model, which means we have to calculate your depreciation, right? And then the revaluation module, we have to revalue our assets. For example, the type of assets that we use the revaluation model is land. Why? Because land does not depreciate. So we cannot use the cost model on land. Please, guys, promise me that you will not depreciate land, because you will see someone say that I depreciated land. Land does not lose value. Land always, maybe it can just the revalued amount can increase or decrease, but it does not necessarily mean that it's losing value through use, because depreciation is actually the loss of value through use. So land cannot lose value through use, right? That's wonderful. And also there are components that need to be regularly replaced. So those ones you can recognize them separately. We do not combine them with when you are calculating depreciation for components, you have to calculate it separately. And also the depreciation for the main asset, you have also to calculate it separately. Then with major inspections, we also need to capitalize and also including the carrying amount. So when you are replacing the components, you recognize the new components and you derecognize the old parts when they are replaced. And then day-to-day servicing, like maintenance, you have to expense them in the profit or loss. They are not supposed to be capitalized. What you only need to capitalize is an improvement, which enhances the which enhances the enhanced, then are you supposed to do? You have to capitalize, right? Wonderful. Right. Right. We discussed about the cost model. Obviously, when we are doing the cost model, that's when we calculate the depreciation. These are things that are not new to you. It's just simple and straightforward. The way that you calculate your depreciation does not change. It will just remain up until even when a qualified chartered accountant, it will just remain the same. And then the revaluation model. With the revaluation model, that's when we have the revaluation surplus or the revaluation loss. And also, I told you about the type of assets where you use the revaluation model, which is land. And then we have impairment. Impairment is a separate standard, which is IS 36, because it has got a lot of concepts that we need to focus on its own. So it's actually IS 36. We are going to also to look at it tonight. I hope we are on the same page. Let me check the group chats before I proceed. Anyone with a question before we go ahead with our discussion? Any question, please? Any? Okay, it seems like no question at the moment, so let's proceed our discussion. So yeah, that's uh, even at any level, even at city level, it's just something that is simple and straightforward. No big challenges, no, yeah, that's PPE for you. So now we want to go to investment property. Why do you want to go to investment property? Because it will help you to differentiate between PPE and investment property. Because usually they love to bring a question whereby they'll say that classify this asset. They said already it already made the definition of an asset, which means it was identified and they concluded that it's an asset. But classify it. So when you want to classify it, you want to tell us, is it an investment property or is it an owner-occupied property, which is PPA, right? So let's move to the investment property. Just a minute. Just a minute, guys. I'm trying to fix something here. Trying to fix something. No. Okay, I'll be sharing now. Right. So investment property. Right. So when you are dealing with investment property, this is a land or a building or a part thereof yield for one or both reasons. So which means it's either or as well as the both. So which means it's not supposed to meet both. It can meet one and we are fine. It is used to earn income, rental income, or for capital appreciation when the value increases. What is excluded is in the production of supply, the production or supply of goods or services for admin purposes, or a sale on the ordinary course of the business. So can you see that what is being excluded, the one that is seen in the uh, production or supply of goods or services for admin purposes? Can you see that the one that is being excluded is actually PPE? Yeah, it's PPE, and also the one the sale in the ordinary course of the business is inventory. So can you see that the one that is excluded, they've got the specific standards that where they are actually that is applicable to them. So it's applicable to the one that one is PPA. So if you are actually classifying, you're going to check, is it used in the production of or the production or supply of goods or services for admin purposes? Is it used for sale in the ordinary course of the business? Is it used to earn rental income, or is it for capital appreciation, or is it for both the rental income or capital appreciation? Those are the things that you are supposed to be careful about. And also, we are going to discuss about something as well. So, examples of investment property. We have learned that is held for long-term capital appreciation rather than for short-term sale. So which means you have learned and then you say, okay, I will just going to hold this land for at least 10 years and then I might sell it after 10 years. Obviously, the place will be developed and then also, um, yeah, which means it might have increased in value. And then the land that is held for currently undetermined future use. So if an entity is a piece of land and then the land they don't even know what they want to use it for, it is classified as investment property. I hope it's clear. It cannot be classified as owner occupied, which is PPE, but it can be classified as investment property. If they don't really know what they want to use the land, so undetermined future use, they don't know. For that reason, an investment property. And then the building that is being constructed or developed for future use as investment property. So if the building is under construction, for example, if you go around maybe Brickton there or in Mayview, if you see a building that is being constructed for residential accommodation, student residential accommodation, obviously that one can be, if it's a company that is constructing it, it must be classified as investment property because their future use, they want to use it as an investment property. And then what is owner occupied property? The owner occupied property is one is IPP, PPE. So examples of not investment property. PPE. What is PPE? We are talking about property, plant, and equipment. It's also called owner occupied property. So it includes the property that is held for future use as owner occupied. So, for example, they are constructing a building that they want to use as for administrative purposes. They are constructing a business that a building that they want to use for what is it for administration or for office use. They want to use the building for offices and other things. So they are going to regard it as PPE. Then, and then they've got a building that they by, but the one that the guys that are occupying the building is actually their employees. They say that a building, and then that building they usually use it to earn rentals, but those people that are paying rentals are their employees, even though they are paying the market related rentals. It cannot be classified as investment property. It can not only be classified as employee as PPE. Are we all together? Anyone? Anyone with a question? I don't see a hand or any comment. Uh, let's proceed. So yeah, that's what. And also owner occupied, the OO that you can see is owner occupied, which means the same as PPA. And then the property that is leased, I don't worry about the finance lease, forget about the second part. Then the third part, the property held for sale in the ordinary course of the business. So anything that is held to be sold in the ordinary course of the business, we concluded that it's inventory. So it cannot be classified as investment property. I'm sure that this thing is simple and straightforward. You don't struggle with it. Right. There's some other instances whereby in one building you have one building. In that one building, there is a part that comprises that property. It comprises both the IP, which is the investment portion, as well as the owner occupied portion, right? So, what are you going to do, right? For you to say, because usually the question that they're going to ask you, it will include a property that has got that has got both the portion, for you to think and be able to apply and be able to see if you really understand the basic principles as well as the basic principles of owner occupied property, PPE, IS 16, as well as IS 40 investment property. So what are you going to do? You have two um, conditions that you need to check. Firstly, can be sold separately, right? Can the portion be sold separately? Let's say that there are floors. It's in a five-story building, which means we have five floors. We have the ground floor, the first floor, second floor, third floor, and the fourth floor, and the fifth floor. So let's say that it is with five floors. Firstly, we want to inquire, can a floor be sold? And then let's say that the first floor and then the second floor. So two out of three floors, they are used as administrative purposes. And then three out of five floors, they are used to earn rental income. You get the point. So you can see that two out of three, and then three, two out of five, and then three out of five. So you have to ask yourself, can it be sold separately? Are we able to sell a floor separately without affecting the whole building? Then, if it can be sold separately, then account for this property or portion or property or portion separately, which means you have to separately, which means that the first two portions can be classified as as owner occupied property in terms of PPE, in terms of IS 16, and then the other three portions can be classified as investment property. I hope this is clear. But if it cannot be sold separately, it means that they cannot sell a floor, they cannot sell a portion or a part. What are we supposed to do? Only classified as investment property if the owner occupied portion is insignificant, right? But I give you an example of five floors, and then two floors are used for owner occupation, and then the three floors are used for investment property. So can you see that with that setup, the owner occupied, we cannot say that is insignificant because it's two out of five, which means it's about 40% of the building. That's the owner occupied. And the investment property is 60%, which means you can separate them, which means you can separate into owner occupied and then the investment property. But let's say that the investment property was actually the owner occupied, the only or occupying one floor, which means it's 20%, and then the 80% is occupied as investment property. Can you see that the owner occupied is insignificant portion? So we can take. So now you have to just use judgment and reasonable. But usually they don't give you something that is hectic that you cannot classify. You can just look at it and say, "Oh, wonderful," and significant or insignificant. They won't give you something that because at your stage, you should be very careful and to see that, can it be so simply? Then, yeah, simple and straightforward. You can just actually what you can do is you can just account for the portion separately. But if it cannot be sold, you are checking about the significance. Is it the portion? And also, if the owner occupies 80%, maybe 4 floors, and then one floor is actually investment property, we can just conclude that it's a owner occupied because of insignificance of the investment property. So that's things that you're supposed also to be careful about. Right, we have this example. Um, Company A owns an office block with 50 offices. 5 of the offices are occupied by the entity, while the other 45 offices are occupied by unrelated third-party tenants. Scenario 1, scenario A, offices can be sold separately. And then scenario B, offices cannot be sold separately. Right, let's discuss the scenario A. So the scenario A, offices cannot be sold separately. So if the offices can be sold separately, how are we going to classify the office block? How are we going to classify it? Now I need your participants. I'll just pick offense. Can you please say something? Anyone who wants to participate, you can just raise your hand, and then uh, anyone who wants to actually the chats. My chat is not showing. I'm trying to get rid of my chat so that I can see what you guys got for me. Right. Um, the property. How does the owner occupied property meet the definition of PP? Is it is not held for rent for rental, administration, supply of goods. Got it? Things. Okay. Okay. So Bono, you got it. That's wonderful. You answered. I'm glad that you got your. And then let's wait. Two people are typing, so I'll be just give them the opportunity to add their opinions and views. So just a minute, guys, while it's they're typing. them so that we can continue. They're still typing. They're typing, guys. We are waiting for you. May you please try to be a bit faster so that we can conclude, we can wrap up our lesson. Milan, want me please conclude your typing? We are waiting for you. Please, may you please conclude? Now, to conclude, even Yeah, because I'm trying to wait for them because I don't want to ask to answer their opinions. Just want them to that they and also guys please confirm to me if you are you done with IS 38 or you do it later in the semester. One was facing a glitch. Okay, no problem. Thank you. So also maybe someone type of assets. Then separately, what does that mean? It means that we can identify them separately. So it means the five of the five offices can be classified as investment as owner occupied property in terms of IS 30, IS 16, and then the 45 can be classified as owner can be classified as investment property. Then scenario B cannot be sold separately. And then now we are taking a looking at the significance part. But if we just check, let me just quickly calculate. So 5 of 50, 5 of 50 is 10%. So it means the while is the PPE is the occupied is insignificant. So we can classify the whole building. Is clear. I hope it's clear. That's and also the subsequent measurement. You choose one, but at the end of each year, your fair value adjustment, you have to adjust to its fair value, right? And then the cost model is really used. It's the same as the IS 16, but it's really used for investment property. The one that is mainly used is the fair value, and also at your level, you only main use the fair value model. Just want to check the okay. So yeah, guys, for today, this was what we wanted to do. And then on Monday, we are going to look on the IS 36, which is the impairment losses. And then after that, the next class that we're going to be on Friday, and then we start to do the questions together while we are preparing for assessment opportunity one. So we just want to have enough time for us to prepare for assessment opportunity one, so that by the time that you go and write to the assessment opportunity one on the 6th of March, everyone is really, really ready for it. So that's what we are going to do. So on Monday, we'll do the IS 36 and all the calculations that are associated with IS 36. And then on Friday, and then I will, during the course of the week, I will make sure that I will provide with questions for you guys so that you prepare. So when you're preparing, as I told you on our first class, that you just prepare and then you do it on your own and then we'll discuss it in the group and then you correct yourself and you see what went wrong. Do you have any questions, guys? We've come to the end of our today's session. Uh, Guys, thank you very much for joining today. We've come to the end of the waiting for Mela, who is typing to see if he is really typing.